Aaron Gibbs, Mark Smith. Aaron, now last time you were on, I remember you kind of pointing out the market overreacting then to the Russian invasion, considering all of the news, the sanctions and everything else that's happened since then, crude oil going through the roof. Is that still the case?
Well, we've corrected a lot of that overreaction. So since February 17th, we're almost today. It looks like we're going to come close back to that level when I was on last, and we're already up 3.5% since the low from last Thursday. So just like we talked, these reactions to wars, sort of exogenous events, can be very fast,
Right.
and I think we're already seeing most of that already being flushed out.
Mark, and I kind of recall you becoming more constructive with respect to the market, but how does, how are you dealing with, how should our audience deal with the unknowns out there, which still include Ukraine and, of course, the Federal Reserve?
Yeah, Charles, there are definitely a lot of unknowns, but there are some knowns. One known is that we're going to see higher rates. And the Fed chairman said today, or yesterday rather, 25 basis points is what he's going to recommend. Who knows? Maybe they'll even go with 50. And if you look back in the over all different rising rate environments, you could see significant moves in a matter of 12 to 18 months. So that's one thing you should know. Who makes money in that environment? Financials. One of the few sectors out there that with a rising rate environment, financials will do well. And guess what? Their valuation is great compared to everything out there, specifically sectors like tech. So that's one thing you know.
Right.
The other thing you know is that we got a war going on over there in Ukraine with one of the countries that creates 10% or 10 to 15% of the world's energy. You got to look in there and say, hey, listen, maybe I should own some energy because there's a lot of instability. And you're already seeing that through because of the price of crude. So those are some things you can control, and you know for sure that's what's going to happen. I think that you're going to be putting money in this market. Those are some of the sectors you should be in.
But I want to pick up on that, Aaron. We have these historic correlations, right? And they're starting some real crazy divergence. For instance, buying yields and oil price typically trade together. Now there's a huge disparity between the two. It just tells me something is overdone. Either buying yields have to come down or oil prices have to come down. And it's hard, for me to chase. I've been selling most of our oil stocks into strength.
Yeah, I regret not looking at the energy trade. I thought when it was already up for 23% for the year to date, I thought that was overbought. Certainly now that it's up another 10% and up 31, again, it feels overbought, but those disconnections, they don't have to trade in tandem. And particularly when you're dealing with extreme events, they can trade, in
Sure.
different directions for quite some time. So it's a matter of, how long are you willing to wait before they revert to the mean?
Okay.
I think energy, given that we are already in an inflationary environment, there is still some room for it to go. Certainly today it looks a little overbought. I might just like to see a bit more of a pullback if you're going to get in, because it does seem so extreme. And obviously it's in the headlines. You never want to buy something while it's right in the headlines.
Right.
And I think if you're selling it as strength, I think that's exactly what you should be doing, taking your profits now. But I think longer term, it's still a place to be for the next year.
Let me pick up on longer term, Aaron, real quick, and I want to ask you, Mark, as well. The VIX is elevated. I mean, it's way up there, obviously. But historically, when it's above 30 at this, where it is now, where it has been, the next 12 months has seen, on average, a monster rally, around 26% on average. How much stock do you put into something like that then, Aaron?
I actually done a lot of studies with the VIX. Historically, yeah, but it's like 60% of the time. So there's still that 40% of the time that you might get, a much more muted uptrend. Obviously, the overall trend is always up in the 12 months following. The VIX has been elevated since February 14th, and we've been seeing a lot of days where it's over 30. So I think we're going to continue to see volatility as long as there are a lot of questions around the Fed, interest rates, inflation. Obviously, the conflict right now is only adding to it. But I certainly feel that we are going to end the year up over the next 12 months, based more on the fundamentals rather than the VIX.
Right. But Mark, also, you know, when it's elevated like this, it speaks to a sense of panic, and a sense of panic does create opportunity beyond the knowns that you say let's take advantage of. Just looking beyond this, further out, 12 months, how do you feel where this market will be?
It really depends on inflation. I'm sorry to say that, but the Fed has a big job to do with combating it. If we can't get a grapple on inflation, it's going to affect everything. You got to remember, 70% of the U.S. can't afford these gas pump hikes at the pump to afford their medical bills and their food at the same time. That's going to all affect stocks. So if inflation isn't taken under control by the Fed and with their policies, you may not have this great second half that some people are predicting.
Aaron, you sitting on a lot of cash right now. If not, what are you buying?
No, I have as little as cash as possible. I think that, you know, like I said, the fear of these actually offers a lot of opportunities. So if you don't have an immediate cash need, I think these are some of the best times to put your money to work. And I've been looking at buying some of the beaten up, previously expensive growth stocks or some semis. I've also, added a little more of my mid caps because I think, as I've noted many times, I think the mid caps are really oversold and great value opportunity.
Yeah, and I think they look pretty attractive as well. So cash is still trash, according to Aaron. Mark, Aaron, thank you both very much. Appreciate it.